Shiv, so we good to start?
Yes.
Hello.
Swapnil, you are not audible.
I'm not on mute anymore. Can you hear me right now?
And now I can hear you.
Yeah. Good evening, everyone, and I welcome you all to the last chapter of the ninth series of Vocal for Local, the initiative started by the Thane branch of ICI. The main intention behind this was to promote local speakers over here, and by your support, this has been one of the most successful seminars that have been organized in WIRC this year. We would like to thank you for all the support that you have been extending over the past couple of months and that you will be extending us again in the future. Today's seminar is a very unique seminar and again a niched field that CAs are developing for themselves. Uh, the opportunities for as a CFO in the virtual world for CAs. Uh, for this seminar, we have the very young and dynamic Samir Arora sir with us. Samir Arora has been associated with the Thane branch in the past with the students' activities, and we are glad that this is, I believe, his first event at the Thane branch, first lecture at the Thane branch. His detailed introduction will follow in just a bit. And before that, I'll just ask the chairman of the Thane branch, Shiv Bhagwan Asawa, to present his opening remarks.
Thank you, Sri Swapnil Kolte. Before we start, my sincere condolence for respected soul, yes, Patil sir. Let's pray for departed soul for 1 minute, then we will formally start the session. Thank you.
शिव तो ऑडिबल नहीं है शिव तो ऑडिबल नहीं है
Om Shanti. Respected members, am I audible now?
Yes, Shiv, so you're very much audible. You can continue.
Respected members, seniors in profession and my colleague in Thane branch, I on behalf of Thane branch welcome you all in this seminar. Today is the concluding day of our extremely popular series, Vocal for Local Speaker Series, and this is the 9th edition of our series, and we team Thane branch are extremely delighted to have you all in this seminar. The objective of the series was to promote local speakers and promote networking among local chartered accountants, and I'm sure we have done it quite successfully. Today we have seminar on opportunities for CA and virtual CFO by our very own speaker, Arora sir. Formal introduction will be given by Rajesh Sharma, Rockstar Chairman of Thane Vikasa. I can briefly tell you that Samir Arora sir journey as practicing what ability. Rupa, हाँ
Yes, sir.
म्यूट कर दो ठीक है I can briefly tell you that Samir Arora sir's journey as practicing chartered accountant work ability. He is leading a team of more than 125 and the area of practice is very new concept and in fact ICI has come out with publication on this probably years back. And if I am not wrong, this is the first time Samir sir will be taking teaching seminar in Thane branch platform, satisfying our theme, Vocal for Local Speaker Series. So far, we have introduced more than 25 speakers from MMIDA region with a twin purpose. It should promote networking among locally available members. And second, in case of any difficulty on given subject, you can meet and talk to locally available experts. Maybe sometimes it can culminate to joint assignment. Respected members, today's seminar will be interactive. If you have any questions to Samir sir, please feel free to ask, but through chat box only, or you can raise your hand. So Rajni can pick up those questions from chat box and ask those questions to Samir sir. And announcement from Monday onwards, we will be having 3-day, 9-hour teaching seminar organized by CLCG group of Central Council level. And details of those seminars will be shared before end of today's session through various WhatsApp group and messages. One more thing, which is repetitive in every seminar, that your membership, your Zoom name should be your membership number followed by your name. Please do not blame us if you cannot upload your PT credit due to non-availability of membership number. Now I request Swapnil Kolte to take charge of further proceedings. Over to you, Swapnil.
Thank you so much, Shiv sir. Before going ahead, I'll again request all the members that if you have in your mind any of the seminars that we as a Thane branch should organize, then kindly get in touch with either Shiv sir, me, or any of the managing committee members. We'll be happy to serve you again. Now, going ahead, I'll request Rajneesh sir to update everyone about the next upcoming students events that Vikasa is organizing. Rajneesh sir.
Rajnish, unmute yourself. Unmute yourself. Rajnish, unmute.
Yeah, good evening. Good evening, everyone. Thank you, Swapnil sir, and thank you, Shiv Bhagwan sir. As Vikasa chairman, I wanted to announce a program of mock interview, which would be held up next week on August 29, 2021 on Sunday. We are targeting OT students who would be starting their articleship and they would be going for interviews in different CA firms, as well as we are targeting CA panel students who have given their exams and now would be expecting results, and thereafter they would be going for interviews in the industry. So kindly do let your known ones, spread this message to your known ones. I've already forwarded the messages on WhatsApp group. So please, I request you to spread these messages to your known ones who could take benefit of mock interviews. Yeah, and now it's my pleasure to introduce CA Samir Arora. He is a very dear friend of mine in college days. CA Samir H. Arora is partner at ATMS and Company LLP. Prior to founding the firm, he was partner in Lakhani and Lakhani. He has been a member of ICAI since 1998 and has been in practice for the past 23 years. He is also certified as Information Systems Auditor from ICAI. His stint in consultancy studies from Jamnalal Bajaj Institute of Management Studies, Mumbai, has helped the firm make inroads in management consultancy practice. The firm ATMS and Company LLP consists of 12 chartered accountants with a team size of 125. The firm boasts of an alumni network of more than 100 chartered accountants, with Samir being the second chartered accountant from the firm. At present, he heads the business advisory department of the firm. He has been a pioneer in growing the firm from a traditional tax and audit firm to a modern. His passion for working with startups has led him to be a mentor at TIE, which is the Indus Entrepreneurs. Samir is also an eloquent speaker and has addressed various business associations and startups. He has also been interviewed by ET Now and Money Today. It's a pleasure that he would be guiding us on this hot topic of CFO services. Welcome, Samir.
Samir sir, screen is yours. I cannot say platform is yours.
Thank you. Thank you, Rajneesh. As a true friend, you gave the best introduction that you could have given to me. Thanks a lot for that. Thank you, Shiv Bhagwanji, for inviting me to this platform. And this is also a way not only to share knowledge, but also network with fellow chartered accountants from our Thane region. And thank you, Preeti, for always being supportive. You have been a friend and, reach out to a person to reach out for, all needs for us. So thank you for always being there. So respected, office bearers, past office bearers. Today, let us talk about something which is a completely upcoming area, which is about virtual CFO services. What I'll try to do is I'll share my presentation. What I plan to do is in the next 1 hour 45 minutes that we have, I will try to give you a background in terms of what the scenario is about CFO services, the scope that we have, the kind of competency that we need to develop to make inroads into that, and areas, because when we talk about CFO services, it sometimes seems to be very broad. So areas which we can focus on based on our experience and which can add a lot of value to the clients whom we are serving. What we can do is maybe post my presentation, we will keep it open for question answers. And in case there is something very important that needs to be asked when I am presenting something, you could stop me and I'll be happy to answer them as well. So I'll just share my screen, just a moment. So before I start, I would say that has been a brilliant publication which from the WIRC on virtual CFO. A lot of things that I'm going to be speaking comes from that publication. Some of it comes from my experience, but a lot of it, but it's a very good publication, and not much of it can be covered today in the 2 hours that we are together. So I would request that anybody who feels interested in the subject post our meeting today should go down and download the book. It is freely downloadable in a PDF format from the WIRC website. So topic for today is opportunities for CAs as virtual CFO. What I believe is, there has been a book by Simon Sinek which says start with a why. So unless the why is very clear to us, everything else becomes very difficult. So let's first understand the why. Why virtual CFO? Why virtual CFO required by businesses? Why chartered accountants should think about being virtual CFOs? So the why comes mostly from the benefits that are derived from these services. So first, let us look at benefits from the point of view of business. So when basically a virtual CFO, which I would be talking to today, is more of a virtual CFO being used by either a startup which is into fundraising or wants to scale fast and raise funds, or an SME business, which is again into a growth part, but they want to streamline and organize their processes so that everything is not dependent on the owner or the directors of the company, but they know that there are experts who are also contributing towards the growth of the company. There are areas where in large companies, there are CFOs, who either leave or there is a transition, and that is the time when somebody acts as an interim CFO for some time till the company gets a full-fledged CFO. For today's talk, we would not be including that, wherein somebody goes in as full-time CFO, because I think that is not very relevant to us as well, and that is subject to some certain specific skill sets that the company may require. Today, what we'll be talking about is people who can act as virtual CFOs and for startups and SMEs. So first benefit for a business is it's piecemeal and low cost. So from the business point of view, there are a lot of entrepreneurs who believe that they actually need help on the finance bit, because what has happened is the businesses grow while the systems processes don't grow. There are the entrepreneurs who are very ambitious, and they would want to do a lot of things, but they are not supported completely from the accounting and finance point of view. So they think that they would want to have a CFO on board because they know large companies have CFOs, and CFOs have always played a very good role in growth of companies. But even an entry level CFO for an SME would cost not less than 30 lakh rupees, which is around 2,50,000 rupees per month. Now, for a company of an SME size, this sometimes is very expensive. Even if the company owner is okay to spend that kind of a money, a chartered accountant or a CFO does not see this like a growth profile. Everybody wants to enter into a job or a profile where they can see growth. Now, if somebody enters a SME at sorry, so they can see that there is not much that they can grow in that profile. So even a professional does not want to join such organizations. Organization can't afford to have something. While even if there is somebody who's joined them, he does not have work for the whole week, because although you want to streamline everything, but a senior level presence is not required all 6 days a week for a business. What is required is only piecemeal presence, wherein the important things are taken care by seniors, while the other things are delegated to the existing team, and output is gone. So that's the benefit, that now you can get a piecemeal and also a low cost, because because somebody is coming piecemeal and giving only certain number of hours, it is always cheaper for the business. Second is expert advice. We chartered accountants have been, while we are in practice, we deal with a lot of different industries. We have experience of various industries, which is not generally available to professionals who have been in certain kind of job. So that kind of an expertise that we get with various industries. Second, we also have interacted with a lot of senior CFOs and know how they think, feel, and what they bring on the table. So although those expensive senior CFOs may not be affordable to the SMEs, our learning from there and our expertise from our domain of knowledge, plus having met so many other people in the industry and worked with so many clients, brings a lot of expert advice on the table. Now, for any business, three things have become very important. One is regulation, second is risk, and third is disclosure. You would have all heard about IPOs of companies like Zomato, Cartrade, and all hitting the market. These were companies which used to be very small startups at some point of time, which have now got listed. So the dream of Indian business, wherein people used to start startups thinking that at one point of time they may get listed. People used to get investment from investors, with the investors thinking that at some point of time the company may get listed and they would be able to get an exit, is all coming true. So India's private equity venture capital investment market is very vibrant. Now, the major players in this market, the institutional funds, are very concerned about governance issues. So if they feel that it's a very good business idea, it's a very good business which is being run, but they seem to have governance issues, they would never invest a single penny in that business, which is where the role of a chartered accountant comes in, wherein we know how to manage governance, we know how to see that all regulations, all rules are being followed, and the company is above board in all matters. We already take care of risk while we take care of internal control, and we know whether that risk is about being too dependent on a single customer, whether that risk is about being too dependent on a single product or single vertical. We are always advising clients to minimize this risk. And third is disclosure. So disclosures are generally when clients are borrowing money from banks. We have met a lot of bankers who say that this kind of services is most important for businesses. They say that by having such kind of services in the industry, the people who will be most happy will be the bankers, because there has been a lot of wrong use of funding by businesses, sometimes not by intention, but because they do not understand the difference between a short-term fund and a long-term fund. They would use money from their CC facility and put it up for expansion, and in return their drawing power is not met, and so they get into problems with the banks. A simple thing like this, which for us as chartered accountants do not seem to be large, because of our learning and our background, is sometimes very big for businesses and bankers. So bankers are generally very happy if they feel that you can have such kind of services on board for businesses, and that's one of the benefits for business. If his banker is happy, he would want to have such kind of services. And again, if you are going there as a team, even if somebody joins as a CFO, he needs people in the team. What has happened with a lot of SMEs is there are a group of accountants who are working there. There is no hierarchy in those SMEs. So even if they are able to get a CFO on board, the CFO would want a team who can do research for him, who can do data crunching for him, who can build scenarios and show them different things, possibilities that can happen into business. Now, that is not possible if there is a single person joining an organization. While we already have a team which is supporting us, who is already trained there, financial management, financial accounting, and costing are subjects where our teams have already learned. So while we are advising our clients into doing something, there is a team with an entire infrastructure which can back it up by workings, so that the entire problem of the client is solved and not just on the advisory part. And we are independent professionals. Again, as I said, there have been the small and medium businesses where you would see there is an accountant who joined as a junior accountant and then moved to a senior accountant and then moved to a senior most accountant, right? So the owners of believe ke ghar ka aadmi hai, he's a loyal person, and that's why although there is no increase in ability of that person, there is no increase in contribution of that person towards the finance and accounting department. He keeps getting senior in his seniority, and because he's been with the organization for such a long time, he starts speaking the language the owner speaks, or starts speaking the language which the owner wants to listen. And we as independent professionals have always been to be independent, whether it is doing our independent audit profession or being an independent virtual CFO. We would not speak what the client wants to listen. We would speak what is right for the company. And that's where an independent professional is always valued by business, because he brings objectivity to conversations and he brings a point of view which is different than what an employee would want to toe the line of the entrepreneur. So these are benefits that generally a business gets, and these are huge benefits, which is the reason why there is a lot of scope for virtual CFO services. Now, why is it important for us as chartered accountants? What is the benefit for us chartered accountants to get into this profession or this business vertical? So it is like moving from being a watchdog to being a problem solver, right? So I've done my CA back in '98, and the only sentence that I remember from my audit book is you are a watchdog, not a bloodhound. While we have other agencies who think that we not only have to be a bloodhound but much more in our audit profession. So here I can give you an example. Few years back, there was a client of mine who was an old client of mine who gave me a very candid feedback when I met him for one of my audit assignments on internal audit. He told me that you call me in the morning or you fix an appointment with me, and I am generally very jittery when you come across with your team. क्योंकि मुझे पता है कि now once you come, you will tell boss your accounts team is not very capable. You have loopholes in documentation. Your taxes are not paid on time. You have penalties which are going to be coming, and we are people who are always going to be showing problems to the client. Now, while our intention is that unless we show the problem to the client, he will not be able to resolve it, and hence we are adding value to his business. But somewhere, he told me that I fear conversations with you and your team, and it drains some energy out of me after having a couple of hours of meeting with you, because predominantly entrepreneurs are very optimistic people. They want to look ahead in life and they want to develop and create things. And this is something, they a lot of you would also have experienced such conversations where we are working with business owners directly and not finance professionals who are managing the entire finance operations. So then we thought, what is it that we can do from moving to being a problem finder to a problem solver? And the best way we as chartered accountants can be problem solvers is by contributing to the business growth of a client. And I think we are all equipped with knowledge and experience to do that. It is only that we have to move our vision to looking at that part in terms of what is it that I can add value in terms of helping my client grow his business, manage his business much better. So it's actually moving from us from being just a watchdog to being a problem solver, which can generally be more value adding in the eyes of the client. Second is there is a lot of disruption in practice. So, changes in law. I think the disruption that we have seen in the last 5 years, I had not seen it in the earlier 15 years in terms of the pace at which things are changing. Your tax audit limits keeps getting increased. Something that we thought is, why we would love our business or why would love our profession as practicing chartered accountant is because it is an annuity based business. The kind of fees that we have in year one should be same in year two and more if we add more clients, and we don't lose clients because of bad service. It's like an annuity business, which we don't see a lot of ups and downs. But what's happening over the last 5 years is there is so much changes that are happening. While these changes are also bringing opportunities for us as chartered accountants, but business looks a little uncertain. It is not the same annuity business that we used to look upon to 10 or 15 years back. The tax audit limit goes to 10 crore rupees, and you know that a large chunk of your client will no longer be required to do tax audit. GST audit moves to self-certification, and you are not sure how many clients of you would want help on those self-certification or would want to take risk of a GST audit coming from the department later. You have an FRA coming in, and you know that you have to be more careful in your audit work with your documentation and your risk management. So there is a lot of changes which are happening in practice, and there is also disruption in practice due to technological advancement. So I have a client who is into IT technology company, and in one of the demonstrations that he showed me about a technology they were building, there is a concept called RPA, which is robotic process automation, wherein a mail which is received on your mailbox, the robot is able to read the attachment on the email, which is an invoice, open your accounting software and post the entry there as a data entry, which no manual intervention. And if you are able to tag your TDS and other provisions right, it will also pass the entries for TDS. So this is something which is going to come sooner than later, because I think that was one example I saw post that I have seen 2-3 other startups bringing in similar kind of businesses where a lot of things are going to be technologically done. With e-invoicing coming in GST, at some point of time, as the government, what they do is they would generally bring any rule for the large taxpayers and then slowly bring it down to the bottom of the pyramid, which is what they may also do for GST. And when CE invoicing becomes compulsory for everybody, I think, creating your GST returns is not going to be a task which may require a lot of chartered accountant interference. With so much of pre-filling coming into income tax returns, I know it is shabby right now, and we feel that the new portal is not good. But you have seen that technology improves pretty fast, and the government learns from its mistake. Uh, so it may not be very far that a lot of it may be pre-filled, and our competition going forward may not be from another chartered accountancy firm. It may come from a technology firm. We never thought that ClearTax like company could come and compete with us. We still feel they are people who will do only salary returns and will not make a dent to us. But I think we have to be prepared to the fast changes of disruption and technology that is coming into our practice. And that's why this is important vertical that chartered accountants can have. So we are partners also in partners in growth as chartered accountants. A lot of times when you would have seen your client grow exponentially, a client whom you had supported when he was 2 crores and suddenly he becomes a 200 crore company over the next 6, 7, 8 years. A lot of it is because of the talent of the entrepreneur, but there is also some contribution that we have had as chartered accountants. Must do our fees improve in the manner in which the client grows. And our experience is when the client is not doing well, he will be the first person to pick up the phone and tell ke thoda fees kam kar do, or take a little bit less. But when it grows, you are generally not growing at the pace at which the client is growing. But if you are able to give services which are impacting his business, which is helping him grow, which is helping him scale business, I'm sure you can be a partner in growth with him. And the fees that increases for you can, if not be in relation to his growth, will be pretty high than what we otherwise would want to earn out of our profession. So benefit to the industry or the business, benefit to CAs. I think these are good reasons for which I strongly believe that virtual CFO can be a very good vertical because it serves the interest of both the user as well as the professional who is giving the service. So now let's look at the roles that need to be played, or the areas which need to be covered by a CFO. So the first area is strategy. Okay, so now when we are talking about virtual CFO services, we need to little bit move away from our mindset of compliance and audit. We have to look at business at a very holistic level. We have to understand business models. We have to understand business levers. We have to understand how business is making money. I think a lot of us understand. A lot of us, while we are doing audit, unless we understand the business model of the client, we will not be able to do audit very, correctly for a company. So a lot of us understand, but if you want to do virtual CFO services, it's more important that you completely understand how a business of a client is going to be growing and what makes the client's business tick. So you will be needed for strategy of the business. Strategy is at the top of the pyramid for any business, wherein that decides the direction in which the business goes. Now, again, I can give you an example. An example, maybe a couple of examples. One example where we as chartered accountants are generally very good at and can answer questions. There was a client of mine who was into a factory for interior, modular furniture factory in Mumbai. And he had gone for some exhibitions in China and came back and told that, I want to expand and I want to have additional machinery of 1.5 to 2 crore rupees to be added in my factory. And, as I said earlier, entrepreneurs, business owners are very optimistic. They want to keep scaling, keep expanding. But I asked him a few questions. I asked him whether this new machinery is going to be helping you add capacity in your business, or one thing is going to be, taken care and other things are not. Whether it is going to reduce cost for your business, whether this machinery is going to add product lines for your business and hence increase revenue. Because we as chartered accountants understand the benefit of an asset in terms of either helping increase revenue, reduce cost, or bring in efficiency, right? So that's how an asset what should be looked at, and that's how I think what we have learned maybe from capital budgeting days. So then he went back, did his research, and came back and told, it will do nothing. It increases his production capacity, but the problem is there is one set of capacity which will get increased, but another set of the factory will become a bottleneck. So he may just be able to push production halfway, and the other halfway he will not be able to complete because there will be a bottleneck. And if he has to complete that, he would need another 2.5-3 crores of expansion, and then he thought, now it's going beyond my plan, and so he dropped it. So simple questions that we as chartered accountants can look at, because our lens to look at business is numbers, right? So that is the best lens I think we carry, which is missing from a lot of business owners, especially technocrats who are into business. This is where my chartered accountancy knowledge helped. There is another example where another client of mine who was into a garment business with a 150 crore top line came and told that he wants to do a 35 crore expansion with borrowing from banks, wherein he wants to do a backward integration. He wants to start something which otherwise is being outsourced to another few companies. And then we told him that let's calculate the return on capital employed for what you did. What I am saying is what I think most of you understand in terms of that's how we as chartered accountants think in terms of return of investment, return of capital employed. That's how we assess whether there is an opportunity which should be taken care or not. So we did a return on capital employed, and we found that the return on capital employed was coming not more than 12%. And with the chartered accountant hat that we had on, we told that this does not look a feasible thing to be done as backward integration. But then a client came back and told that if I don't do this, there are certain other areas of business I miss. My designs are getting copied because that outsourced companies are not exclusively working for me. So when I'm doing an R&D and getting new designs and getting that done from my outsourced vendors, that is getting copied from there very fast. Although there are agreements to support not to be copied, but and second is there are certain fabrics which are a combination of certain materials which are roosted together. Those trade secrets are also getting very open because he has to give them. So there was a business context to expansion and not just return on capital employed. So when we did that brainstorming, understood the whole value chain that would get created by doing a backward integration, we then together went ahead and told that you should maybe do an expansion and just not look at financial parameters. That's where we as chartered accountants need to contribute into strategy, helping businesses set direction by asking the right questions, and also by giving right numbers, interpretation of numbers to their business ideas. So other is process. Process is something as virtual CFOs, our goal should be to move an organization from being people dependent to process dependent. I think that's how large companies have scaled, and that's how other SMEs can scale when they are moving from being people dependent to being process dependent. There are a lot of processes which are required in any business. You have processes from order to cash. Order to cash is a process wherein how a customer presents his order to a customer till the time the goods or the services are delivered, in terms of created, manufactured or produced and then delivered, how invoices are raised, how follow-ups are done for invoices, and how money comes into the bank account. So the entire value chain, from order to collect, is something that we need to have processes built in, because the better processes that are built in will bring better customer satisfaction, because the order comes from the customer and he knows that things are being taken care. And it also brings in a lot of working capital benefit. We have seen companies which struggle with working capital. I'm sure a lot of you are dealing with SMEs and would find that they are the one who are hit the most, specifically post-COVID, in terms of working capital, where people become too conscious about holding liquidity together. Now, and the question when we ask our clients is, why is money not coming on time? The first impression is that the customers are not good. They are used to paying me late, and they have the tendency that they don't want to pay on time. But when you dig deeper into the problem, you find that there is more problem with process than with the other side of the people. The invoice was not raised at the right time. Even if it was raised, it was sent by courier. The acknowledgement of receipt of invoice was not there. The confirmation of receipt of goods, services was not very clear. Once it was there, if the credit is for 45 days, somebody has to send a soft reminder on 40th, explaining to them that on the 45th day, the money is due. On 45th day, there has to be a call that has to go on, which is all missing with SMEs. And they feel that their collection system is not in place. So our role is to put processes there, from maybe order to cash or procurement to pay. A lot of money is made in in purchases, because generally a sale price is determined by the market. So what you can make the profit in a business is how you can purchase more competitively in business. So again, I'll tell you an example of a company. It was not my client, but it was a learning experience for me in terms of how it was a large corporate, and I had interaction with their CFO, and I could understand how a CFO had converted his cost centers of finance and accounts to a profit center. So what they had done is, they had a standard 45-day credit period for every purchases that would come in. And that's how the procurement and the purchase department would negotiate rates with their vendors. Once the purchase is done and the goods are approved, there was an option that behind the invoice, this was times when physical invoices were coming in, behind your invoice, you could write in pencil and say that in case, the money is given to them in 2 days of presentation of this invoice, how much discount would they give? What if they get money in 15 days, how much discount would they give? And how much in 1 month if they get, how much discount would they give? And then the accounts and finance department would come together and see that there would be people who are ready to give 3 to 4% discount if money is paid on day 2 rather than day 45. And there would be people who would pay 1.5 or 2% if money is paid in day 15. And then they would collate and see their treasury or the bank balance and identify the people who are paying the highest rate of interest and give them money upfront. And that's how at the end of the month and end of the quarter, the CFO would come out with a report in terms of how much money they have made by managing their funds well. So while we find a lot of people parking their treasury in liquid funds and FDs, this is what a smart chartered accountant who was acting as a CFO did. So there is a lot of process that can be built even there, from procurement to pay, trying to make money for the organization, and also paying vendors on time. The more you delay payment to your vendors, there's going to be an interest cost coming in for the next purchase you do. So then processes on payroll, processes on setting incentives in terms of how organization could set incentive processes. Then most important is processes on reporting. So in terms of what kind of reports should move in the organization, especially in manufacturing setup where you have people on the shop floor and then you have the MD sitting on in his corner cabin. How does flow of information happen? Because in a lot of SMEs, the information flows only when asked. There is no auto flow of information, which is what is called process. We need to build process in terms of how information and reports will flow from the bottom till the top in a manner which gives very clear understanding about where the business is growing and how it can be improved. So this can be daily reports coming from production. This can be daily timesheet reports coming in terms of service company. This can be daily cash flow statements coming from the accounts finance team. So a lot of reports that can move, and then weekly and monthly reports. So calendarize those reports and see and build process around this. In my personal example, building processes, building the right reports brings in 20 to 30% more efficiency into businesses. So while we as started accountant feel that this is business as usual, this has a lot of value for businesses. So again, my point of view to everybody right now is going to be, there are a lot of things that we have started accountants maybe provide, or we feel that these are things which are very low hanging fruit, but even the small things are of a lot of value to clients. So this is one of the processes that we need to identify and do work on processes. Third is people. Okay, so we are not HR professionals, right? So we are not here to manage HR of organization, but we understand basic principles of HR. We know that there has to be unity of command. You cannot have two bosses to whom somebody is reporting. We know there has to be delegation of authority. We cannot have everything being held by centrally by the owners or by certain level of people. We know there has to be some kind of a job description. So while we don't want to do all of this for the organization, I think as a CFO, you need to own your finance and accounts department. There are two types of responses you would get from owners who are not very hands-on on accounts and finance, which is a very small percentage of people you would find. First kind of response is कि मेरे सारे लोग बेवकूफ है, काम नहीं करते, they are always free. मुझे पता नहीं ये लोग इतना काम क्या करते हैं, they are always busy, but I don't get output. And there is another set of people who would feel that I have the best people in the world. They have been managing for 10 years, and I have not got any notice from GST, and I have not got any notice from income tax. So whatever is happening is happening. So their expectation from their accounts and finance department has also become that they should only take care of taxation and compliance and answer queries of the auditors and nothing more. And the first set of people feel that they are not doing anything. So that's where we need to come in and see that as CFOs we are putting in place systems of job description. We are putting in the most important, are principles of accounting, that somebody who is managing cash does not manage the bank, the books. So whether there is a bifurcation between duties, responsibilities upon the team, whether they are equally, whether the work is given as per the capability of the person, how is it that, they are able to understand that they are performing to the expectation of the management. So what is the key result area which has been expected, whether it is submission of daily bank balances, daily sales report to the organization, whether it is filing all their taxes in time, what is it that will help the management feel that the accounts team has done the job right, and how is it that the accountant can prove that he's done the job well. So, defining JDs, defining KRAs, trying to mentor them, you would find that, that also brings a lot of more ownership in the department, wherein they start believing that we are not here only to take care of compliance and bookkeeping, we are also people who can support business, which is the area where we are trying to shift, that we are not people who are taking care of accounts and compliance, we are people who are going to be driving business decisions, we are the people who are going to be supporting business growth. So next area definitely is technology. I see a lot of youngsters in the participants, and I am sure they are the people who are pretty fast at technology. And I still feel I am pretty old right now in terms of adoption. While I keep trying to be updated with what's coming in terms of technology, specifically technology which is going to be impacting our profession, specifically with the accounts finance department, whatever is coming in. So when somebody is looking at a CFO role, they are expecting that you bring in a lot of technological changes and make the whole organization more efficient. Now, these technology changes could be in terms of getting an ERP implemented. Yeah, I know, yeah, we may not be experts in ERP implementation, but I think we are the best people who can advise how ERP for the finance and accounts department needs to be mapped. I have seen a lot of organizations which are on SAP, B1, and other ERPs, which was designed by people who had more knowledge of the production side and the manufacturing side. And so even the charter of accounts were not created in a manner which could give correct reports for the accounts and finance department. So here we know that a business is able to take decisions based on the correct report that we can present to them. Those correct report can be done in two ways. Either we can get it done on Excel by searching for data, and second is it can be captured from the accounting system. So if it has to be on the second, which is the viable way and a long-term way, we cannot have people creating Excel sheets and then not being accountable for the numbers. It has to come from the accounting system. We sometimes have to transition clients to ERP systems. So helping them identify which are good ERP systems, to helping them implement specifically from the finance and accounts part, to see that data that is getting captured, because we believe that what gets measured gets improved. So if you want to measure, you need to capture it well. So whether data is getting captured in the ERP system, whether ERP system is needed, I think Tally itself is very powerful as accounting software, with most of the businesses not being able to even utilize 50% of the power of Tally. So even if you're able to move from 50 to 70% of how cost centers and other things would impact in Tally, I think that itself brings a lot of benefit to the businesses. So getting technology first in ERP, and then there are a lot of other technologies which have come in. Like for certain grown-up organizations, there is in terms of procurement, there are metrics in terms of who is going to authorize the payment. If it is something related to the production, then whether the procurement department's PO is attached and it gets so you have your PO, you have your GRN, and then you have your purchase invoice, and then somebody authorizes this. So there are technology platforms which help in sending the bills to the right person for authorization. And this is not a bunch of bills which we see in old generation businesses, which go on the top of the table of the decision maker who is busy signing it. These are all technological. It goes, you log in, you approve, and it goes to accounts for payment. Again, similarly, we have worked with a lot of technology companies which help in receivable management, wherein data is automatically, I think a lot of you won't be knowing it. Actually, it is very good for us as chartered accountants as well, where you would have clients in excess of 1,000, you don't know how to collect money from them. So this is a software which can automatically pull data from Tally. It would allocate, clients to people whom you have identified. This could be your, accounts manager, customer relationship manager, or sales people in the organization, who would then have 6, 7 people whom they need to make a call. And then automated reminders would be sent to the customer based on the credit period. And there would also be a link to pay. So, they are just trying to streamline and ease the entire process of receivable management, with the owners getting a dashboard in terms of which account looks risky. And that's why how we can set credit limits to that account. How much is the interest cost that you are been paying for, delayed receivables. So a lot of technology that has come in and can be improved. And that is what we as CFOs are expected, that we abreast with what are the new technologies which are coming and help client implement them. So the next one is on compliance. I think this is the one where I don't need to speak a lot, because we already are master in compliances, so we are known to be master in compliances. We are known to be people who help the businesses follow the rule of the land. We help businesses pay the right amount of taxes. We are the people, who help in nation building because of the taxation. But when we talk about compliances as a CFO, sometimes there are areas which are beyond taxation. So we need to be aware. We may not be expert, but we need to be aware of certain laws which may be applicable to the company. Whether it could be the labor laws, maybe the new labor code is coming. Maybe it is something to do with POSH, which is on Prevention of Sexual Harassment Act. Whether it is applicable, at least we need to be the one who's going to be guiding the businesses that there are laws which are applicable, which you need to abide by. And then maybe we could have consultants coming in and getting those things done, in case we are not, we don't have enough knowledge about it. If we have knowledge, we should do it. There could be laws in terms of, SEBI. There could be laws in terms of RBI. You have, foreign money coming into share capital, and you at least need to be aware that there are FEMA rules regarding filing of FCGPR and other matters. And if there is an outbound investment, maybe there are certain filings which need to be done every 6 months. So you need to be aware in terms of what laws are present and what those laws mean to this business, and then help them comply with those laws. So these are basically areas which businesses want as virtual CFOs to be taken. And from whatever I have spoken, I think most of us know a lot of it. It's only that we have not packaged the service well. Sometimes we sit with our clients and advise a lot of things to them without even knowing that what we are doing is virtual CFO. This is what I used to understand when I used to sit with my clients. When I had got that feedback that your meetings are not very great because your team brings in problem on my table. After that, my behavior a little bit had changed with client, where I would go and start with business kaise chal raha hai, what's happening in business, what's growing, what's not growing, why is it not growing, and just try to give some advisory bit there, not expecting any fees in return, and trying to contribute in my own level to help the businesses grow. I think that's what a lot of us started accountants do. Only thing is, we become so friends to our client that we don't think that our advice actually has to be charged separately. But if you package it well and if you create it like a service line, I'm sure the clients will be wanting to pay you and take the services. So these are areas which you need to cover. Not now. What I would do is we will talk about specifics in terms of do this 5-6 things if you are doing virtual CFO, and you would get a lot of results for your client. So this is broad. The areas are broad. Strategy, process. This is very broad. Now let's get into specifics and see what are those specific things that we should be doing, which is like a CFO pathway for business transformation. So why is anybody appointing a virtual CFO? They're looking at a positive transformation of the company from level this to that. They want professionally run company. They want things to be professionalized, and that's how. And a lot of you would have large corporates. Though we don't have very large corporates kind. We have always focused on having SME clients because we found that we were able to add a lot of good value to owner-driven businesses. But a lot of you have large corporates, and you would know how large corporates operate. And so a lot of learnings that are there from large corporates should be brought to the small and medium enterprises. I think as virtual CFO should be that our intention is the businesses of our client should grow, and we should be partners in that growth. If we have that mindset, a lot of things will be taken care. So the first thing that we need to do for a client is to have a business plan. So, again, you would find that at least I found that 8 out of 10 people whom I had met as SME business owners never had a written business plan for their business. I would ask them, like I said, I had gone into conversations about talking about business much earlier than we thought it was virtual CFO. And I would ask them, kya lagta hai, kitna business grow hoga next year? And they would come back and say, I will grow 40%. And then I would ask them, okay, 40%. So how will you grow that 40%? Will your existing customers buy more? Are you increasing the price of your product? Are you adding more customers, or are you adding more product lines, or are you increasing geography? I think when you ask this 4 or 5 questions to the client, that's when he actually starts thinking. Before that, it was just a headline statement that I will grow by 40%, and he had no plan in his mind. Maybe he had a plan. Business owners are very smart and they may have a plan, but it was not very clear in his mind. And also, what happens is, a plan in your mind, and mind is very fickle, so it keeps changing with the environment. You find that ILFS gets bust, and the banks are very skeptical about giving money, and you feel no, 40% is not required, let me grow only by 20%. And so the communication that you had done to a team that I will grow by 40%, and everybody was geared upon with that, after some time they feel that the owners are telling that no, 20% is enough. So they don't know which gear the vehicle, the car is of their business is moving, whether it is top gear, whether it is first gear. So it's important that we have a formal business plan created by them, because that business plan also brings in accountability of the owners on the table. It means that they are serious about taking CFO services, because this takes a lot of effort from them. What is our role? Our role is to convert the vision of the business owner into a financial document which can be measured and monitored. So how do we do that? So the first session is generally with a brainstorming session, wherein we would ask the management of the companies to come along with their HODs and other key guys in the business, wherein we would talk about growth, and we would generally be the one who is asking questions and seeing whether within the organization they are all aligned. When the CMD or the CEO of the organization says, I'm doing 40%, but the production head feels that he cannot go beyond 20%, it means there is some disconnect. So any written document or business plan that you create will never be successful, because there is no alignment between the top management. So the brainstorming session is such that all ideas that they have about growth of business comes on the table, wherein you are taking notes, wherein we tell them that don't have a scarcity mentality, paisa kahan se aayega, customer kahan se aayega, tell about what you want to do. And that's how you have a brainstorming session where everybody contributes, comes to a certain alignment in terms of vision and plan for the company, and which is documented. Now, after this, the next step is to go and do a research, right? See, although we are very good with numbers, but we do not understand all industries in detail, in depth, as much as the business owners or the management do. So now it's important to go back and do our own research. Now, the research which comprise about research about this company in the market, in terms of looking at their customer profile and their vendor profile. It could also be a research about their competitors. Get a few name of their competitors and benchmark against them and see what's happening with them, whether their contribution gross margins are similar, whether our client is better, worse off, what is the fixed expenses they are carrying, and margin. So you have an idea where is this client placed in the industry. If you get some hold on industry research about from CRISIL, ICRA, just read that report. If you find some company which is listed in that space, go and read their annual reports. So all this gives a lot of idea in terms of where the industry is heading and where does this company fit into the whole industry profile. After having done that, after having the brainstorming session, then start putting it all down into a proper formal document, which is, like I said, is just a conversion of the vision of the owners or the management team into a formal Excel document. Now, how does that business plan get created? There are two approaches to creating a business plan. One is a top-down approach and one is a bottom-up approach. So what is the top-down approach? A top-down approach is where the owners or the management of the company decide in terms of how much they think they want to grow. So they say that we are at 20 crores. Next year, we want to be at 25 crores. The year after that, we want to be at 32 crores. So when they tell that they from 20 to 25 crores, it means they want to do a 25% jump in their the revenue numbers. And then starts the breakup in terms of how this number is going to be approached. Second option is a bottom-up approach. Bottom-up approach is more beneficial for a little bit more scaled up companies where you have HODs or where you have business vertical heads. There are companies which have a service business, they have a manufacturing business, they have an export business, they have a domestic business. Now all these businesses generally have a HOD or a business head who would then make their own business plan and give. The export guy would say that I think I'll be able to do 7 crores because this is the pipeline that I have. The domestic guys say I will be able to do this. Service guys say that I will be able to do so much in my service, and then you consolidate their plans and create the business plan. So this is the bottom up approach, which will definitely give better results in the long term because it is created by the team who is going to be executing it. But not all companies have the privilege of having a bottom team which is so well equipped to create their plan. So most of them go on to a bottom top down approach. And also sometimes the top management is more ambitious. So if they leave it upon to the HODs, they would come with a very conservative plan, and then you have to push a more optimistic plan to them. So rather they would go with a top down plan wherein they tell that this is the revenue number they want to do, and then break it down in terms of what products, what geographies, what customers, in terms of how they look at their business and how they can scale. Now, what happens is when they do this, there is a lot of roles getting created for a lot of other departments in the company. That if you want to grow by 25%, the marketing people need to get in more customers. Marketing customer department needs to get in more leads. So marketing department starts working on their own plan and says that, I want to spend so much on digital marketing. I want to spend so much on attending a conference. I want to do this, that. And then they come up with the budget and present that budget to the company that I will be able to get so much leads, because always there is a difference between leads and customers. So there is a droppage between how many leads the marketing department is able to create versus how many the sales department is able to close. So they bring with their own plan. Sales brings their own plan in terms of, if we get so much leads from marketing, this is how many people we want on feet on street who would go display our service or product and be able to close it. So this is my budget in terms of what I would require. Production goes and sees, okay, if you want to grow by so much, do I have the production capacity to do this? And whether I would be able to manage the kind of product profiling that the management wants. And so he brings his own plan on the table in terms of managing his cost of goods sold and production cost. And then finally, it is our finance department which has to come in and consolidate everything and see that if marketing needs budget, if sales needs budget, if production needs some budget, how much money would we require in the business? Whether a capital expenditure is required, so what is that capex required? And if the business is going to grow, working capital is needed. So how much of that working capital would be needed? And with after all that, this is the requirement of fund, whether we have existing limit from our existing bankers or whether we would have to apply for more limits, whether promoters want to bring in their more money into the company, whether the collateral that the company has is sufficient to get. So those questions will start coming in when you make a business plan. And this is very important because otherwise what happens is the business owner runs, he gets orders, but suddenly he finds that the production is not able to procure goods because you did not pay money on time to the vendors. And then it comes down to the finance department that why didn't you pay money on time? So rather than getting into that area that you get stuck once you go in, it's better that you make a plan and then go as per plan. So that's how important business plan is. I think a lot of us already create financial models for our clients, either for bank purpose when they are doing a CMA report, or people who want to get their company valued when you want to have a 5-year DCF created, where we know how assumption sheets are created and we know how the financial model is created. So business plan is very similar to that, but we need to have a wholesome understanding of how things are going. Second is SOPs and ERP implementation. I think again something that SOPs is something that we as chartered accountants understand well, which is standard operating procedures. As I said earlier, that our intention should be to move that organization from being people dependent to process dependent. We should free the business owners from not wanting to work with somebody in the accounts field because he knows everything about accounting. Most of the people don't want to let their old accounts people leave because even though they are inefficient, because they feel that he knows everything, I don't know anything. So how you can build processes wherein they have that strength to think about transition while you are there and you can handle transition. So how you can build SOPs so that people know how work needs to be done. Similarly, ERP implementation, I think we spoke at length on this in terms of why ERP sometimes becomes important for organizations. Especially I have seen that with manufacturing companies. wherein if their production gets mapped, and also there are a lot of other, there are companies which have mapped their CRM systems with their accounting systems, so that the revenues which are getting, which the winnings are not missed from invoicing, and the invoicing is not missed for collection. So they have made a streamline. There are a lot of new businesses coming on e-commerce, so there's a huge, huge challenge that they have with reconciliations. You sell on Mintra, you sell on Amazon, you sell on a lot of Nika and other stores, and then there are problems that they run discounts sometimes. They charge you for certain listing, premium listing. There are CODs which come back. So once you have sale and then you have CODs, and CODs are lying at the warehouse because the packaging got opened. So reconciliation at the end of the month sometimes is a huge challenge for a lot of companies which are growing very fast on e-commerce bit. And now there are technologies which are available, which can help in such reconciliation. So if you can, it is also okay that we become master at one field. Young chartered accountants here, if you can master on some of these fields like e-commerce, that you serve only e-commerce client and the pain points of that industry, that everybody who wants to sell on e-commerce platform has this 1, 2, 3, 4, 5 points. They have problems with reverse GST. They have problems with reconciliations. So if you can solve that, there is huge demand. You need not be a strategy person, but you can solve even a small problem for growing startups in the e-com space and still bring a lot of value on the table. So next one is on budgeting. So budgeting is also a process which you would find that is often missing with small and medium enterprises. Like they don't have business plans, they don't have budgets. Anyways, if you don't have a proper business plan, you would never be able to create a proper budget, because budget is a short-term translation of your plan. So what we need to do is break up our goals into monthly and quarterly budgets, and then present it to the organization so that everybody is aligned. Sometimes it is very happy to create a business plan where people are in a very euphoric state that we created a 50 crore, we created a 100 crore business plan. But the next month you go and see the organization, everybody is working as usual as they were working earlier. So there is no change in action, and everybody has forgotten what they spoke last time. There was an offsite, they went to a good hotel and they enjoyed there. But now after a month, everybody is back to doing what they were earlier doing, with their numbers being what it will be. So it's important that budgeting aligns everybody for the short-term goals. So we also tell clients that you should spend time working on your business and not just in your business. With a typical SME owner, you would find that he goes to the office in the morning, and by evening either he's talking to vendor and he's getting the best price for the goods, or he's talking to the banker getting some additional TODs, or he's following up with customers, taking out the order, repeat orders, managing relationship, this, that. And by the end of the day, he's so operationally consumed that he never had time to think about where his business is going. So he did a lot of activity. But as business owners, as entrepreneurs on the top, it's important that they spend some time on working on their business and not just in their business. So if there is one day of a month, which we always tell them that you should be keeping it aside for reviewing your business, that's when something like a budgeting exercise helps. So what you do is you put your budgets and you do your monthly review based on what your performance is against that budgets. So that's how you keep everybody aligned. You get the HODs and everybody who was responsible in creating the budget to sit in a room and talk about what went right and what went wrong in the month and how things can be course corrected. Another important thing is closing accounts and MIS. Again, looks very simple, but we have seen that a lot of organizations are not able to close accounts on a monthly basis. The business owner would get to know about their profit once their books are audited somewhere in the month of July, August, September. And the auditor would tell them, we as auditors would tell them that, last year you made 3 crores profit. Or we would tell them at the time of calculation of advance tax, telling that you're going to be making so much profit. But he never has an idea in terms of why he made profit and why he did not make profit. And what went right, what did not go right. So it's important that we put that culture of having a closing, monthly closing of books. So monthly closing means if you are having EMI payments going in every month, you bifurcate that EMI paper into interest and principal. Most of the times it is done in the month of March. EMIs are directly being adjusted against loan account. And in the month of March, you make one JV in terms of, this is the interest that goes to PNL and the balance is loan repayment. It may also require passing depreciation entries every month. It may also require maybe providing for unsecured loans from directors or their families, so that you have an idea in terms of what money the company is making on every month basis. Because if you are able to give the right reports at the right time to the business management and the entrepreneurs, they wouldn't require a lot of other things, because entrepreneurs are very smart. They are smart, that is why they have scaled businesses. It is only that they never received the right information at the right time, and accounts department always felt that their role ended at providing data for auditor and paying the taxes. So that's why it's important that we put in processes for closing. The earlier there will be a lot of pushback from various departments if they have factories in various cities telling the data does not come on time, the invoices don't come on time, we cannot close, vouchers from traveling people don't come on time. But I think it's more of a cultural thing rather than, we know how, if large corporates are able to come out with their annual results in 10 days or 15 days after the closing of the year, why can't SME business owners close their monthly books? So it's more cultural rather than anything. So our role is going to be helping them close books every month, and that too within the first 5 or 7 days of the next month. Because after that, again, it is no use. If you are able to close the books after 20th of the next month, then it is similar. The next month is also past. So what is the entrepreneur going to do with the information that you bring? And also MIS. So MIS, I think, is a lifeblood that every organization needs to have, and CFOs need to bring on table. This MISs could be in terms of segment-wise profitability. This MISs could be in terms of profitability on product. This MISs could be on working capital management. Basically, your MIS should cover profitability in detail in terms of where the revenue came from, what is the movement in fixed expenses, whether we are more on fixed expenses on the contribution level and the gross margin level, whether we are at the same percentage level or whether our margins are going down or up. And then compare this with two numbers. One is a previous year number and one is a budgeted number, because we want to see what we did compared to last year. In current year, a lot of these previous year numbers are not helpful because most of the businesses were not operating last year. So you may choose to compare with the year earlier, which was a more normal year, and then most importantly with the budgeted year, because you have something which you have budgeted, something which you had planned. Where are you going against that plan? And next set of MISs could be on working capital management, in terms of how cash flows are being managed, which are the sticky debtors, what is that 30, 60, 90 aging analysis of debtors, what is the aging of inventory. A lot of money you would find of SMEs getting stuck with either inventories or debtors. So what's happening with that money? If you could put it on table, the owners are able to, the management is able to take decisions and find ways of disposing some inventory which they never had in their mind was lying in their stock, or maybe pick up the call and talk to somebody for recovery of money which they never thought, because they were so busy in their operational work. So these MISs are very important to be presented in a manner which gives more information about the business to the business owners. Next is control and risk. I think we are all experts with controls and risk, and we have to see that the business operates in a manner where the risks are taken care. A risk being of loss of revenue, this risk being of expenses which are not eligible being paid off or being booked, risk being goods not received, invoice received, those kind of risk and internal control systems now we need to put in place, so that right internal control system is also like putting a like a CC camera. You would find that when you put a CCTV camera, people feel that they are being looked at. So the intention is not to do something wrong. Similarly, a good control process is like a CCTV camera, because they know that there are controls and there are checks and there are people who are monitoring those controls and checks. So they would not intend to do something wrong. So, that's a better place to be rather than allowing somebody to do wrong and then catching them. So I had experiences with client where their machines were stolen from their factory and sold without brand outside. And then when it was caught, because some of their customer had told them, so it was not only loss of that machinery that was stolen, but it was loss of those people who were working with that organization for 14, 15 years. But the problem was that there was no control procedure, and you had completely kept things open, and and maybe somewhere बोल रहे हैं तिजोरी खुला रखा है तो किसी को चोरी करने की मन होगा. So rather keep it closed and not tempt people to do things. So that's how we have to create our control and risk environment so that business owner feels that his risk is taken care by our presence in the organization. Trainings, so trainings are very important as CFOs. A success of a CFO depends on everybody aligning to what the CFO advises and moving the organization in that level. See, as a CFO, you are some of the newcomer in the organization where everybody else is like the old comer employees working with the organization and the owners for a long time. You need a cultural shift to come in. Now, if you need a cultural shift to come in, you need everybody to buy into the ideas that you bring in. Sometimes the business owners buy in that idea because they are frustrated and they want something to be changed, but not everybody in the organization, because change is something that everybody wants to resist. So that is why you need to be in a constant mode of training. It may not be formal training where like we have a classroom. It may be one-to-one training where you sit across and train people. The training needs to start with your financial accounts team, where they need to know that they are not data entry operators, but they are data providers for business decision. They need to know that they are important in the whole value chain of how business is getting created. So training to your team to understand their importance and why anything done wrong from them or any delay from them, how much would it cost business? If they have not paid provident fund on time, then what are the implications or other things? So they need to know the implication and the value of what they are doing. Sometimes we find organizations where everybody is getting trained. You would have the account, you have the sales training happening, marketing people get trained, production guys have the people who gave them the machinery being training them, but the accounts and finance team have never been trained. So they were always expected to be on top of things, on their own. And over that, you would find auditors like us who would come and point mistakes that they have done, and they would again get into their shell and not open up completely. And if the accounts and finance team is in the shell, they will never be able to create value for a business. So that's why it's important for them to be opened up, telling that you are not being judged. It is okay, you learn. So make them learn about the technology that is coming in, make them learn about how they can grow in their career by being more value providers. So that is for the accounts and finance department. There is another important training which is for non-finance people of the organization. So I sincerely believe, and I'm sure all of you agree, that there is no decision in the company that is taken which does not impact finance. So everything that is decision is taken in the organization, whether it is buying a raw material or whether it is wastage or whether it is bench size in a service company, everything has a financial implication. So people who are heading those decisions should be trained well to understand the implications of their financial decisions in the finance value chain. When you sit down and explain to them how their downtime of machine, if it is reduced by 10%, will impact the profitability. If you are able to tell the HR team how they can recruit people at 5% cheaper, will impact the company's performance. How you can tell a team into service where you have software company having developers who always have a bench, telling them how not accurately creating the bench can cause the company, because sometimes you have bench of certain skill of people while the customer asking something else. So while you are not able, you are losing revenue of something the customer is asking, while you have a cost sitting on your bench which is not being used. So these kind of trainings, these kind of conversations with non finance people is very important, which will not only align them to the organization, but which will also make them respect you as a professional who is coming to be a change agent and getting to move the organization to a better orbit. Fundraising, I think this is something which is, as I said earlier, is going to be right now is very vibrant, and I think India is poised to be where it is, where a lot of fundraising will happen. There is so much cheap capital which is available across the world, and India is the only place which looks to be economy which is going to have growth because of our size of the market plus the talent which is available here. So there are going to be a lot of opportunities. So what we need to do as CFOs is we are not investment bankers. We are not ones who know funds. When I am telling we, I am telling myself, a lot of you would be experts there. uh, we are not merchant bankers, so we are not the ones who can directly go and get the client listed or get fund. But we have to be sure that we understand this entire ecosystem in terms of how valuation works. We need to understand what is it that the investor looks at in a business. What is it that will be looked at when due diligence is done. So most of the large investors would send one of the big fours as due diligence for due diligence, and that's where whether uh, whether our client will be able to handle that kind of a due diligence. So whether we can keep them DD ready, whether or not we have an opportunity right now, but are we creating that culture that we are DD ready? Let any large accounting firm come and they will be ready for every question, not only related to accounts and finance, but whether documentation are being managed in terms of how customer complaints are being managed, and whether that is a record being managed, whether there is a record in terms of lifetime value of a customer. These are terms which are now very frequently used. Investors want to look at cost of acquisition of a customer. Investors want to look at how much time does the customer stay with you, what is the time they come repeatedly and order back to you. These are things which sometimes are not easily available from the accounting that we do, because our accounting would be yearly, so we would not account a lifetime value of a customer which the investor would want. So can we build those processes? Can we create that kind of a thinking in minds of the client to understand? And also sometimes just giving them a realistic view about where the company lies and what valuation and whether they are, because I know a 6 crore top line company telling me that I want to go for an SME IPO. Because they have to be shown reality, what is present, what is possible, what is not possible, how valuations are being worked out. And I still come from the era where valuation was driven by profits. My education was in the time when we were taught that a discounted cash flow method or a multiple of profit is what the valuation of the company is. So explain that to the client, plus also the new methods which have come in, wherein even a loss making company like Zomato can have $1 billion valuation plus, and how things have changed because they are creating monopolistic or duopolistic kind of businesses which are valued very differently. So understanding that landscape and keeping our clients ready for any opportunity that may come in, because the more wealth that gets created for your client in any event of fundraising or maybe sale, their emergence and explore acquisitions are huge. I just met a client where ENY has come for DD, and we are just helping that client with the DD. They're just a 5 crore top line company, but in e-commerce brand with 70% gross margins, which is going to be bought by another company which wants to get listed, another e-com company. So people are creating profiles. They want to buy smaller companies, and if one of those smaller companies is our client, it could be both an earning opportunity plus I think it's a very satisfying opportunity if you are able to create that kind of a company which can be sold, or which can raise funds. So I think these are things that are pathways or areas which you can specifically look at when you are talking about CFO services. Now, with the last thing, what I would do is how do we create ourselves to get into that? What are the toolkit that we require? Like a mechanic has his own toolkit. What is our toolkit to go there? So one is tie-ups. So we need to tie up with a lot of people. Like I said, we are not merchant bankers, we are not investment bankers. So can we tie up with those people? And first thing, understand how they operate. And secondly, if our client needs them, can we get them, connected to them? Similarly, when they know that you are into this business and you help companies be DD ready and make them created in a manner that they can scale up, they would also introduce some clients, because they also meet certain businesses which are very good but not well managed. Because we have got references from bankers who are telling that please look at this company, they used to be great businesses, but right now we find something is not right with the reporting. So somebody is not either advising them well, or they are not sure in terms of how the cash flow is being managed. So when you are in that ecosystem, when you tie up with people who are helping those companies scale, there is a opportunity for cross referrals, for them recommending a client or you taking your client. Because when a client comes to you, they want us to be complete solution providers. So we cannot tell them that I don't know a lawyer who can draft a term sheet, I don't know anybody who can do a shareholder agreement, I don't know which is, they want, they feel that if you don't know, then it is no, they don't have a possibility of knowing, because they are into business and they have only known their industry. So that is why we need to have tie-ups, and we need to at least know how things are getting done. Second is training. We need to train ourselves. Like I told earlier, that go and give training. But I think since this is a paradigm shift for us, we also require a lot of training. We need to read certain books, books like 0 to 1 in terms of how business are built. We need to maybe, for me, the seeds of this kind of work came in when I did, a course from Jamnalal Bajaj, which was, done in conjunction with Bombay Chartered Accountants Society. It was a short course, but the kind of professors who were there in Jamnalal Bajaj and the kind of idea that I got about how businesses are being operated actually showed me that there is a lot of value that we can also add to businesses because of the knowledge we carry. So we need to have, in fact, our ICAI has come up with a program on management leadership development upon going beyond boundaries or something. It's a 3-4 month program wherein you would have lectures once 10 days or 15 days, where I have asked few of my office colleagues to join, because that will be conducted by professors from ISB, that will be conducted by industry leaders, and they're going to give a perspective which otherwise is very difficult for us to get. So we should be trained, understand more business, because ultimately finance and business linked together is what is CFO services. So understand business, understand how things operate, and get ourselves trained. Skills, again, a lot of skills in terms of, I know the new generation of chartered accountants are very good with using Excel, pivot tables, how integrating data, creating reports out of this, creating better presentations, graphical presentations. All those skills are very important, because when you are sitting with business owners who are decision makers, they don't have time to read 15 pages or 20 pages of your report. It has to come like a dashboard. So whether we have skills of creating dashboards, whether we have skills of extracting data, BI is becoming big, business intelligence. This may completely change the way business information is getting processed. Whatever we are talking about, MIS may just become, a lot of things may become automated going forward. Large companies with a lot of data are now using BI, but what is getting used there suddenly becomes commoditized, and it will start coming to the SME. So whether we can understand what BI is, whether we have some idea in terms of how AI operates. We are not engineers, so we will not know how to operate AI, but we should know whether this is something which can be done, and if it can be done, whether then there are consultants, there are professionals available. So develop those skills of understanding and yourself doing it. And last but not the least, it is team building. Nothing can be done alone. You need to align your team. Like I said, I have asked my few team members to learn a few things. Similarly, some good YouTube videos is what we circulate in our team to learn in terms of how new age businesses are getting created, what kind of companies are getting funded, what is their business model, and let the team think not only compliance. Let them not just think about taxation and audit, but let them also think business. I think once they think business and how businesses are being operated, they become good auditors and good tax experts as well. Because ultimately what we are doing is adding that functional layer to business, right? So understanding business and how whatever our advice is, or whatever our reports are going to the client, is going to be helpful, is to be, so build a culture around team to be inquisitive about how businesses are scaling and how we can contribute to them. So that's a little bit on the toolkit, and thank you everybody for patient hearing. I am very thankful for all of you all for being so patient. Thanks a lot.
Samir sir, thank you very much. Let me see what are the questions raised in chat box. Let me ask you one by one.
Yeah.
There are a lot of thank you messages for sure. At least 40-50 messages only for nice presentation. Double is looking, I am getting the same feeling after listening to you. We need to identify the profit center instead of just advising free. One question from CA Madhi Paka, how to interact with virtual CS?
So virtual CS, I think it is good for tie-ups. So there are a lot of So I think there are a lot of company secretaries who have scaled their practices. Some of them are in our Thane Mulund area only, and they've scaled. I think we had Makran coming in to talk, right, for Thane Study Circle as well,
Yes, yes.
and he scaled up his business very well. And there is a lot of learnings that we can have from such professionals. I think I speak to them a lot, not only to learn about corporate law, but also how they are scaling their practices and what services they are offering to their clients, so that whenever our clients need similar kind of services or we are stuck in some challenges, we can go and meet them. I think it is all about giving and receiving, which is important.
And Mr. Mati, now we have been allowed to have multidisciplinary firm. So why don't you make CS? And probably you can change the name instead of CFO service, you write CSO service.
Perfect, sir.
Am I
Perfect,
right
sir.
or not, Sahibhai?
Perfect. You're right. And I think this muscle.
We are now at CSO role.
Perfect. I think multidisciplinary is the future for us. I think that's what we will see going forward, where actually client needs a one-stop shop, and he wants all his problems to be solved, and he feels that his chartered accountant is the Superman who can solve all his problems. And so if we want to remain that Superman, we need to have tie-ups and we need to have teams which can cater to all these problems.
So there might be certain other queries that might be coming in at a later stage. Will it be possible for you to say email ID over the chat box so that people can get in touch with you if you're comfortable with it?
Yeah. I think, what do you want me to do? You want me to write my email ID and phone number or something?
Yeah, email ID. Phone number if you're comfortable, but email ID would definitely do a great deal.
Yeah, sure. So I'll just put it on the chat box so that anybody would want to be connected. I'll be more than happy to, help. So I have just put it.
Thank you so much, Samir sir. I'd like to thank you on behalf of the Thane branch and all the members. This was a wonderful session that we had, a very unique session, or rather very futuristic thinking session. And slowly and gradually, we do hope that we all get inculcated towards the pathway that we have shown today. Might be a new step forward, or might be a little scared to leave aside our traditional practice and jump into this new era. But that is the need of the hour, and that is the future. What I understand and what we believe also, sir. If you have any queries, I'm pretty sure that the members can definitely get in touch with Samir sir over the email ID that he has written over the chat box. And I really want to thank you, Samir sir, for taking out the time, especially on the weekend, and for enlightening us with all the knowledge that you have. We would be troubling you again over some other lectures at the Thane itself. And thank you so much, sir.
Thank you. It was a pleasure being here. Thank you, Shiv Bhagwan ji. Thank you, Sapnil. Thank you.
Yeah.
Thanks a lot.
Now I formally declare end of today's session.